Consistency is what pushed me to the level I am today. I don't attempt to do one thing today, do another one tomorrow, do one thing next tomorrow. No. The same thing. Market is not changing. Okay, the same market. All right. All we just need to do is to ensure that we streamline the process in such a way that in every market condition you are able to trade very well. That's all. So you have to be consistent too. I'd expected you to tell me that well, not to rush it, but at least you should be able to tell me expressly where you are. Somebody is noisy. Can we identify the person? Okay, you should be able to tell me expressly where you are, but you are not able to tell me. You are not able to tell me. So please get back to work and get serious about it, and give me feedback in the next 2 weeks. Okay, and remind me in the next 2 weeks I'm going to hold one session with you. All right. So every questions you have, every challenges and everything, you let me know so that I can solve your problem. Okay. All right. Yeah. So Tokpa, you can mute yourself now. It's like it's your side that is a bit noisy. Hello, are you hearing me, guys? Can you all hear me? Hello? Hello, guys. Can you all hear me?
Yes, sir.
Oh,
Yes,
okay. Okay, sorry, it was network. Yes. Welcome back to 2025. This year is going to be different. I don't think I'm going to introduce any theory or concept to you this year. Where we are now, subsequent things that we have you might not need it at your level. All right. By the grace of God, any course I prepare now is going to be for hedge fund. All right. It's going to be for institutional trader and for hedge fund, not at this stage, because some of the things contained there might be cumbersome sometimes. Okay, might involve a lot of analytical stuff that you don't need at retail trading level. Okay, and some of those things are not so much to technical analysis. They are more into fundamental. But even if you close your eye against the market, whatever conclusion you arrive at there, you can call somebody to go and check that chart. You can tell that person the chart must be going up. And then when the person opens that chart, it will tell you that it's going up. It's not coming down. That is, trading. You don't need to look at the technical. You can look at it from fundamental and you know what is happening. So we may not need all those things. But then we must deepen the existing knowledge that we have. That we know, or we have rather. You must deepen it to a point where every day you have a winning trade. Okay? Because any day I want to trade and I see a setup, I should win. I must win. What did I say? I didn't say I should win. I must win. Because for me to call it a setup, it then means that everything I need to see, I have seen it. And the worst that can happen is a break even. And if I see that news is coming, I close it before the news and go and sleep. Just like today. I told you that gold is going to buy, but news is coming. And I don't want to cry in silence and vent the anger on my wife and my children. I'm not ready to do that. I told you I'm closing. I don't know how the trade will go. Ordinarily, everybody should be expecting that America should be experiencing unemployment rate. Many people should be out of job, especially because of snow. Is it winter they call it? Winter. But you see the shocker? The reverse was the case. Job number was fantastic. Unemployment rate was down. Meaning dollar becomes bullish. And EU good would drop down. Can you see the logic now? So when major news is coming, you don't gamble with your money. You get out of the market. The opportunity is coming. Do you get what I'm saying now? So now, what I'm going to show you today is that many people look at this chart. They don't know. Okay, now everybody knows that this chart is going up. Abi?
Yes, sir.
But, and if a chart is going up, it is a buy, it's a bullish market. Abi?
Yes, sir.
Correct. But I am telling you that not everybody know where to get it. How to get it. Give Aboki this chart and ask, is this thing going up or is coming down? They will tell you it's going up. Give a primary school child, is this chart going up or coming down? It's going up. But I can tell you that many people will buy this in this chart and they will lose. Why? Position. Everybody knows direction. But not everybody knows position. Position. The position you are within the structure. You see why I always want my trade? You know why I always want my trade? I know the direction. You know the direction. I understand the position we are in the chart at every point in time. And the position we are in the chart will determine whether I am at the top, I am at the middle, or I am at the bottom. Simple. If it's a bullish market, if I look at the chart, I don't want to see demand zone at the top. I don't want to see demand zone in the middle. I like to see my demand zone at the bottom. So these things I'm telling you is still what is lacking in some people trading, that they are not confident. They don't know the position where they are on the chart. You don't know your position. For instance, let me give you an example. Right here we are going up. It is not your business to say whether it's going to stop here, it's going to stop here, it's going to stop here, it's none of your business, honestly. But what we have now is we are still going up. So if you now look at the structure as it's happening, already we know up, weak demand, take it away with a sweep. The best weak demand concept or weak supply concept you can have is the one that the weak level is taken away with a liquidity sweep and hitting your 75 to 90. Look at this one. Go. and study. Look at it. Is that not weak demand? Look at it. 75 hitting 80. That is the best you can have. All right. Now, if the upside is starting here, you have this, you have this. Okay. Then the next, you must break structure, right? Right? Hello.
Yes, sir.
You should break structure. Now we are out of the structure. You remember I told you in the morning I was capping. Did anybody hear I was capping?
Yes.
Okay. At what point was I trading? Okay, before I get there. Now you have the up, you have the down, you have the up, you have retraced to 75 to 90. You have broken structure. Anywhere above structure is where? Where are you? Anywhere above the structure, the break of structure, where are we? Where are you? Anywhere above it. Hello.
Premium.
Yes. Anywhere above the break of structure in a bullish market, you are at premium. Yes. If we agreed that if you come back to this level, you are at average price, and we are saying that you cannot even buy at this level, is that not what we said?
It is, sir.
You can't buy. So why is it that you cannot buy? Because the price is at average. Not to talk of a situation where the price is now above the average price here. You can't buy there. You are at what? Premium. So because of that, but I knew this one was still going up. That was why the buy setup I took, that I hit TP there, I told you I was capping. If it was here, I will never tell you I was capping, because I was buying at premium. So it has to be, the setup must be a short move, short move, because at any point reversal could come. Do you understand now?
Yes, sir.
I'm now going to give you a formula. Is it a formula now? I'll be a secret. I don't know whether I will call it a formula or I will call it a secret. Look at this. You have this. You have this. You have this. You have this. Right? Let's say you have all this like this. Right? Now, you have a break of structure here. Abi?
Yes.
Correct. You will see that in 80% of a trending market you have, in 80% of the break of a trending market you have, every break of structure usually contains a portion before that break, a portion where you have large volume into the market, and that large volume is indicated. You will identify the candlestick where the large volume is. I don't know if somebody understands what I'm saying.
Yes, sir.
Yes, sir.
Check the other block. Check the other block of that candle. You know that candle, that large candle will always have imbalance. Hello?
Yes.
Check the other block where that large move happened. If that retracement fall into 75 to 90, it is an automatic zone for your buy. Hello? Is somebody hearing me?
We are together, sir.
If you don't understand what I've just said, you let me know. I'm just showing you
Yes, sir.
secret
Yes,
of the market. That's all. Secret. Because some of you are not confident yet. Why a lot of you are very, very confident. Some of you self are overconfident. Eh?
Don't understand, sir.
I will explain to you with an illustration. Okay?
Okay, sir.
Let's look at
Yes,
this
sir.
trend to the upside. These are things that make you not to have confidence. I will show you now. Now, we want to look at the trend. Okay? From here, you have your break. Candle will have imbalance. Before that break of structure, check the base. The other block there is your demand. If it fall at discount level, it's your demand. That's what I'm telling you. If somebody does not understand, let's go. Where is the candle where you have a large move before the break of structure with imbalance? A large move with imbalance. Can we recognize it, ladies and gentlemen? Is it this one?
No, sir.
Why is it that it's not this one?
Because there's no imbalance there, sir.
Correct. Is it this one?
No.
Why?
There's still no imbalance.
Okay. Is it this one?
Yes, sir.
Why?
Because the imbalance is very clear and there.
Correct.
To spot.
Where is the other block that sponsored that large move? Here.
Yes.
This is your demand.
Oh, okay.
And you can see that the level where we have recognized that demand, market has become efficient there. Hello?
Wow.
Market has become efficient there.
Sir.
Of course, I told you where I'm telling. Where that large candle with imbalance, where it's located, must be below the break of structure. It must happen before the break of structure, which means if market has to come back to the base, market will have been efficient. Hello?
We are with you.
Is somebody still confused? I am telling you what will make you to trade with confidence. I want everybody to remove fear. Trade with confidence and authority. The whole of this week, I did 3 trades. I did 4 trades. 3 hit TP, 1 break even. That is the one. I said I will close it before the news. I said break even. He even took away the break even. I say in Islam they say Alhamdulillah. Let it go. Do we understand now?
Yes, sir.
So now the question is, what of if? Because you know that the system of trading we adopt is not a kind of system that you are just going to enter para here. Hello? I need somebody. I want if your side is not noisy, unmute
Yes, sir.
and
Yes,
answer
sir.
me. It's an interactive session. If now,
Yes,
just
sir.
close the system and go, please.
Sorry, sir.
The system we trade is not a system where you determine your demand, market get there, you just jump in. It's stupidity that make people to do that. Those ones can never make money in their life. I'm telling you the fact. I've taught you that demand, when market hits valid demand, that's what is called liquidity. Go and ask people people just say liquidity. I don't know what you call liquidity. When market hit valid demand, that's liquidity. Why is it called liquidity at valid demand? Why do we call it liquidity? Why? Nobody knows. Because the price is cheap there. JP Morgan see that the price is cheap, they bought. Morgan Stanley see that the price is cheap, they bought. Barclays Bank see that the price is cheap, they bought. Johnson see that the price is cheap, he bought. Is he buying with water? Is he buying with water?
No, sir.
Is he not buying with
money?
No,
sir.
Is he not buying with money?
Yes.
What is called liquidity?
Money.
So when market now hits the demand zone where the price is the cheapest, and people are now buying because the price is cheap, where best can you have liquidity? Outside demand and supply zone. Oh God. Do you understand the logic now? Okay, let's
go.
Well,
sir.
Let's go. So what I was saying is that you do not just buy here, bam, because you identify this. What you still need to do is that this is just a bias. You want this demand to start buying. You need to go, if you are doing that on 1 hour, you need to go to like 5 minutes. If you are doing it on 4 hours, if you recognize your zone on 4 hours, go to 15 minutes. Check the structure. Whether it aligns perfectly with the what? With the trend you have identified. And if guys not take it down, you can even use divergence to even test it. Look at it. You have the upside right here. Okay? Look at the structure. Weeks demand taking off. Okay? Taking up to where? Up to 80%. Everything structurally is correct. All we did in 1 hour time frame was just to identify viable demand zone to buy. Okay? Which must be under the break of structure. Demand zone must be there for the market to be efficient. When you look at the structure on 5 minutes or 15 minutes. Now we have come to 5 minutes. Since we used for 1 hour that time, we are now checking this structure on 5 minutes. Can you see that we have a perfect structure? I told you there are 2 ways of getting your setup. It is either on the external structure, you have inducement in such a way you take away the inducement before you go, or you on the external structure you have a mono wave. This inducement here is what is called 3-wave structure. What do we call it? 3-wave structure. Here, you don't call it a 3-wave structure. You don't call it a 5-wave structure. You call it a mono wave. What do we call it? Mono wave. Mono wave means one move. And every mono wave to the upside must develop internal structure liquidity in form of weak demand. That's all. Bam, bam, bam. That's all. That's all. The reverse is the case for the sell. Is that okay now? So, what type of, do we have a 3-wave structure here or a mono wave? 3-wave structure or a mono wave? Mono wave. So, in a mono wave, you are going to have a weak demand or weak supply, as the case may be. In this case, we have a weak demand. Bam, take it away. Boom. During high volume session, yes. Up to 75 or 80, yes. So structurally, we are what? We are correct here. That's stage 2 in trading. Stage 1, overall, is to determine whether the market is generally going up or down. You have done that job. Pass. Number 2 is to study the trend and know where you are. Are you at the top, at the middle, at the bottom? Once you determine this, the next thing, on that 1 hour or 4 hours, if you are a day trader, I'm not talking of swing trader now. If you are a day trader, and I know most of you are day trader, determine the demand or supply zone. Once you just determine it, based on that daily day trading bias that I told you, recognize below the break of structure where you have a large move, recognize the base of it. That is likely going to be the demand zone. Recognize it. That is stage 1 now. Stage 2, Go back to lower time frame and go and study the structure, whether it aligns perfectly with what you are looking for. Whether you have mono wave as it goes, that break of structure to the upside, did it do mono wave or it did a 3-wave structure? If it did a 3-wave structure, test the 3-wave structure. Do you have a convergence there or a divergence? If you have a convergence, it's likely that the second leg, oh God, what I'm saying with mouth without drawing, do we all understand? Do we all understand? Voila.
No, sir. No, I don't.
Oh my goodness. So are you guys saying that if I decide not to write anything, I'm just talking market, you will not get me?
We will, maybe not comprehensively.
See what I was saying. I said in this structure, you want to check whether you have this or you have this. And that's your analysis time frame now, maybe 15 minutes. If you got your demand or supply zone from 4 hours, please just use 15 minutes to go and look at the structure. If you got your demand zone from 1 hour, please go and use 5 minutes to look for your structure. When I'm saying to look for your structure, you have said you have identified demand zone. How has the structure behaved to arrive you at demand zone? How has the structure behaved? Remember, I told you that the idea of price is given to you by the structure of the market, right? Idea of liquidity is given to you by the volume in the market. An idea of timing is given to you by the session you are. Those are the 3 things that we use in behavioral analysis. Are you okay now? So I now said that in looking at your structure, you check this and you check this. Okay? And I said that if you check admit all, okay. If you check this, you have one more work to do. You need to check this. If you have this, oh sorry. You have this, up here, higher high, up here, higher high. Excuse me, sir. This is your demand zone. Who does not understand like this? Who does not understand it like this?
It's clear.
Because this convergence is showing that the second leg here is stronger. So which means that the demand that sponsor it is okay. It's cool. So market just need to what? To return to this level and you buy. Now, what of a situation where you don't have this? You now have this. Up, down. So right here you have high, higher high, high, lower high. Is this not a divergence? Is it a divergence or a convergence?
Divergence.
Divergence. So this divergence means that what? The second leg here is sponsored by this move that is very weak. It's very weak. That is why we call that level inducement. That is why we call that place average price. That is why we call that place weak level. And for every weak level, it must be taken to the downside or upside as the case may be. This one must clear it before it goes up. This is what you are checking in your structure. This is the stage 2 of your analysis. You see, you have determined this place.
And this is done not on analysis time frame.
On analysis time frame.
Sir, this is done not
on analysis time. We are on analysis time frame. First, we started with 1 hour or 4 hours to get your demand. To get your demand. After you have gotten your demand, you need to study that break of structure. How did it happen? That mitigation of your demand. How did it happen? That's what we are doing now. And we say there are 2 ways it will behave. It is either with three-wave structure or with a mono wave. If it's a three-wave structure, test, does it have a convergence or a divergence? Why are you testing whether there is convergence or a divergence? Are you with me? Are you with me? Good. Why are you checking whether there is a convergence? Why are you checking whether there is a convergence or a divergence? Is to enable you to know the right level to use as your demand for the structure. Is it here or down here? If it has a convergence, it means that it is up here because this leg is strong. It is strong, it's not with your own eye, it's the third eye of the market you used to look at it. If there is divergence, it means that this level here is weak. Then you must come down here. So that is, we are done with this type. The second one is you want to check your structure. That break of structure, it doesn't give you three waves, it rather gives you one wave. That's mono wave. Boom to the upside. If you give boom to the upside by breaking structure, what do you want to see in order to participate? Create an average price, weak level, take it away, boom. Like this one, boom, we take our trade to the upside. So your analysis time frame is ended here. Analysis time frame ended. Analysis time frame analysis. Yeah, let me put it that way so that you understand what I'm saying. Analysis time frame analysis. Who does not understand the grammar? That is the analysis you are doing to your analysis time frame ended here at the point where you mitigate at 75 to 90. It has ended there. If you want to take it directly at this stage, you can take it. You can take it. You can say, oh, the fib from here to upper side here, you have 75 to 90. You can take it directly. Boom. Stop loss below the 100. TP extended to where? 75 to 90. But I don't do it most of the time. I don't do that. Why is it that I don't do that most of the time? Why? Why? Go back to 1 minute. Why is it that I don't want to do that most of the time? Why now? Somebody answer.
Because you need to test before that. Because you need to be sure that market is efficient.
I want to be sure that market is efficient to confirm that this liquidity that we hit here, this demand that this demand now is not just on your analysis time frame. You have decided it on your bias that this is our potential demand. Understand the word potential. Yes. You are not sure, but based on the rules, that's the potential demand. How do you validate your demand zone? You validate demand zone when market tap into it. That's how you validate it. Now market has tapped into it, validated. We have liquidity now because we are now at demand. Market is cheap. But how are we sure that everybody is putting in money into this market? That is where we now want to determine our entry. That is the third phase of market analysis. We now want to do what? We now want to check for efficiency. Because we know in a market where there are plenty buyers and plenty sellers, there is no room for mago-mago. Everything is calm. Everybody knows the price. Pam, 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 pam. And it gives everybody opportunity to enter and go out. Can you see? Is this structure not calm now? Can you see? Calm. Give everybody opportunity to enter and go out. So what do I want to do for me to enter? Boom. Boom. I saw this boom. Is this a mono wave or a three waves?
A mono wave.
A mono wave must, if it's retracing back to 75 to 80, what type of structure are we expecting? What type of structure are we expecting?
Fake demand.
Yes. Bam. Average price
fake
created
demand.
here.
Fake
yes.
demand.
Average price created here. Pull back. Take it away. Boom. To where? 75 to 90.
Now,
Are you getting it now?
very well, sir.
This is my entry. This is the third phase of the analysis. Where do I extend my TP? You know, I have used fib now on my entry time frame to get my 75 to 90. This one is just for the purpose of getting my entry and my stop loss. See? This is not for the purpose of my target. Target is determined on your analysis time frame. Entry and stop loss is determined on your efficiency, on the time frame where you get your efficiency. Somebody listening to me?
Yes, sir.
Yes,
So
sir.
where
Yes.
do I now get my target? I'll go back to, we use 5 minutes because we got to our demand from 1 hour. So now let's extend our target. From here to this level, I'll now target where? 0 minus 0 point what? 27. This is my first 1 to
27.
10. This was my first 1 to 10 risk to reward. The first trade of the week. Straight on. Okay? Whatever happened thereafter, efficiency during New York session is a powerful tool. Whatever happened in Asia, most of the time, will not take away that efficient level. Can you see the Asia was ranging, was playing until it flew up? All right? Now, let's do second example and repeat the process. Let's repeat the process. Let's repeat the process. So look at it. So we had our break of structure here, right?
Right.
Break of structure here. Under the break of structure, there must be one candle that is very strong and very powerful. Is it this one? Is it this one? Is it all this one? It be like saying now this one.
No.
Is this
No.
one?
Yes, sir. Is that one? Yes.
No.
Who say yes? Who say no?
There's a week. There's a week below.
I'm talking of one candle, very strong, under the break of structure. This is the
That's the
candle.
one.
That's the candle with imbalance. Strong one with imbalance. This is the candle. What do I say you should do? I said there must be an order block. There must be a candle, small, before that one. Project it, provided it is under what? Under the break of structure. So this is the potential demand zone. The first job is done. The first job is done. Now, what is the second job? What is the second job now? What is the second job? Bamio. So we go.
No, sir.
What is the second job? You guys are big trader. That I don't know. What is the second duty do we have now? We have recognized that this is a potential demand zone. Okay, because this is okay. This is 1 hour. So let's go to 5 minutes. If this is 4 hours, we go to where? 15 minutes. Let's go to 5 minutes. What are we to do in this 5 minutes time frame?
2 minutes.
What are we to do in this 5 minutes time? What do we want? What do we want here? I'm really focusing on the process
We need to see
for all of you this year.
Structure.
Yes, you want to see the structure.
Structure.
Yes, you want to see this as a break structure, study it to the upside. As it come back, study it. That's what we are talking about, structure. Okay? Look at it. Is it mono wave that we have or three-wave structure? It's even five-wave structure. It's even five-wave structure in this case. You can have three-wave, you can have five-wave, you can have a mono wave. In this case, you have what? A three-wave structure. That is how it goes up. Okay? But in most cases, you have three-wave structure is common. Now, how does it come down? Can you see? How can you see mitigation that is as perfect as this, ladies and gentlemen? If you study mitigation theory, can it be more perfect than this one?
No, sir.
So
this is perfect.
What did I tell you? When market has a mono wave, what type of setup are you expecting for it to come back to 75 to 90?
Good demand, sir.
Good, because we are in a bullish market. Then, if the market now gives you a three-wave structure or a five-wave structure, remember this is the break-up structure, boom, to the upside. To give you three-wave or five-wave structure to the upside, what you now expect mitigation. You now expect the market to do mitigation down. That is the mitigation you see here. It's clearing all the inducement. Back to where?
Very sharp.
Yes, back to where? 75 to 90. You are done with your analysis time frame.
5 minutes, sir.
So somebody who wants to enter directly without confirming liquidity, like as Felix does sometimes. As he does sometimes. Sometimes he will enter it here. Ọlọ́run dẹ̀ ń fún ṣe. Felix may not understand this Yoruba. Ọlọ́run ń gbà fún.
I don't, sir.
What somebody should interpret for him.
Ọmọ ológo ni sir. Ọmọ ológo 685.
Somebody who understands Yoruba.
God is helping him. He's still entering for him.
That's what I'm saying. But when he now get break even,
Yes.
I just laugh. You get break even in a trade where sometimes I don't get break. Why? Because you enter upon liquidity, bam. I look for efficiency after liquidity. If you look for efficiency after liquidity, it's not likely that you'll be taken out. So that aside, it's just for us to learn from everything. It doesn't mean that what he's doing is wrong, because literally in this analysis time frame, you can enter here because this is already your 75 to 90. You can enter here, but your stop loss is below here. But this is what you reference in your demand. Your stop loss is below here. Do you get it now? And look at your TP. Let's project TP for this one and check the risk to reward.
And maybe you should not be breaking. You should not be breaking even quickly. If you enter direct.
No, if you enter direct, you must break even quickly because you have not confirmed that.
Yeah, but when efficiency is testing, you're likely to be taken out.
That's what I'm saying. If you are not confirming that liquidity and you enter directly, you are likely to be taken out because it may not be enough. It will go small and come down more. You get what I'm saying now? But if the liquidity is enough, it will not go down further. It will now go and develop efficiency. Once you develop efficiency and you enter, it is this efficiency that confirms that liquidity was real. You get the logic now? So the risk to reward here is 1 to 4. Let's remove it. That's the one you enter direct. Now let's go back to which time frame. We are done with stage 2 of our analysis. Stage 3 of our analysis is to go and get our entry. 1 minute.
1 minute.
Let's study our efficiency here. Efficiency here. I think I show you this trade, right? Up.
Yes.
What type of move to the upside is this? Is it a mono wave or a three-wave structure?
Yes. Mono wave.
In a mono wave, what type of setup are you expecting?
Good demand.
Market
Fake
must
demand.
create fake demand or average price. Boom. Take it away. Boom. When it's taking it away, coming back to where? 75 to 90. That is your entry. Boom. Where's your stop loss? Right here. Where's your TP? How do you get your TP? Now, I told you that there are two ways you put there are two set of places you're going to use FIB. The first one is in your entry. It's just to get your stop loss here and your entry. Go back to your analysis time frame to go and do your profit projection. Some people, they get a brilliant setup. News is not coming and they just quit, just like that. Why are you? See, I prefer to get 3 trades in a week and hit TP for them. I'm telling you. Now, the 1 to 10, the first trade of 1 to 10 that I hit, it will take me the next 10 losses before I lose that profit. 10 losses. Is it possible for me to have 10 losses in a row? It's not possible. Now let's extend it. This is why account will always grow. Account will always grow. Look at it.
Grow.
Can you see? Let's extend it. The other time it was 1 to 4. Bro, what is the risk to reward here, guys?
1 to 10, sir. 1 to 10.
Can you see the difference between entering the market based on efficiency or entering the market directly upon liquidity taking? When liquidity is taken, you have to go and confirm the liquidity with efficiency. That is where you enter your market and you have a better risk to reward. I don't need more than 3 wins in a week, sir. I don't need more than 3. Give me 3, I'm okay. But those 3, 1 to 10, 1 to 7, 1 to 8, 1 to 6, minimum 1 to 5. God forbid I will do 1 to 3. What am I looking for? Which 1 to 3? 1 to 10. If I get 1 to 10 twice, let's say I risk $100. I get 1 to 10 twice. That is $2,000. It will take me 20 losing trades before I will lose that one. 20 losing trades for something that I make in a day. It will take me 20 losing trades. And how many trades do I take in a day? Sometimes 1, sometimes 2, sometimes none. So when do you think I will trade to lose this one? And before I will trade to lose this one, I will have gotten another 1 to 10, 1 to 10. So the losses that the winch in the village is counting for me. Before that one reach half, I have made another 1 to 10 into 3 different places. This is why the witches are failing. They are failing. So if you think the witches in the village are disturbing you, it's a lie. You lack knowledge. You lack knowledge. And if you have the knowledge and you have not applying it appropriately, then you lack wisdom. Chegi, do you understand now? Can we do one more?
Very well, sir.
Yes, sir. Yes, sir. I'll do one more.
Now.
Sir, can we do another pair? Please.
Yes. If you go to BTC, I'm
enjoying this one.
I want to say another pair, sir.
Who says
if you go to BTC,
it's fair.
If you go to BTC, current buy.
Okay.
Current buy on BTC is the replicant of this.
Okay. So now, I see that some of you are always talking of time frame. You see, some people will tell you that I get my bias on 4 hours. God forbid I will go for 1 hour. God forbid I will do 15 minutes. God forbid I will do daily. I laugh. See, let me tell you, that demand zone you are looking for might be clearer on 1 hour. It might not be in existence on 4 hours. So you have to come down. If you cannot see it on 4 hours and you are expecting it, you can't see it. Come down, break it down to 1 hour. If it is not clear on 1 hour, break it down to 15 minutes. If it is on 15 minutes, you get it clearly and it meet up with all requirement. Fantastic, that's your demand zone. Then, where will you now get the structure? You can go to 3 minutes and get your structure. Once you get your structure finished, go to 1 minute, get your efficiency and get your entry. There is no rule that say this is the time frame you should use to get your demand level. But what we are saying is that in most cases, you will get it on 1 hour. In most cases, you get it on 1 hour. It's on a very rare occasion that I don't get. If it's not clear on 4 hours, you will get it on 1 hour. On 1 hour, you will get it. Okay? But you remember something. Break of structure is very, very important. Break of structure is very, very important. Very, very important in all this. And sometimes you also see that you have break of structure, you identify your demand zone, it won't come back there. I will give you an example. It won't come back there. I suffer in the hand of God. This move you see here, from here and here, Nat was only able to take one trade. One trade. And that one trade, I quickly close on time because I was already close to premium. You see how it happens? Listen. You have break of structure here. Okay? Look at this. Correct? Look at this. Is that not the candle you are looking for below the break of structure?
Yes, sir.
What? Look at this beside it. That's a confirmation that is the demand candle. Extend it. This is your demand, expected demand zone. Look at this. Look at the expected demand zone. When this one happened, this one here is supposed to come back here. Did it come back? Look at another one here.
No.
Another one here. This is the one I was able to take, but it's already at premium. So I was careful. Now, you see it clearly now on this time frame. So, but here, come here now. Come here now. If you come to this time frame here, you are seeing it plenty. Are you not seeing it plenty? This is the idea. People, I don't know if anybody has studied demand and supply before. They'll not tell you rally-based rally, drop-based drop. All those things that they use there. Who has heard it before? Who has
I've heard it before.
This is the idea behind it. This place they are called base. If you go to the right time frame that give you the demand zone, this is what they have identified there. This is it. Because in every major move you see, there is first and foremost deliberation about whether to buy or to sell. That period of deliberation is a lean volume time that creates that indecision. That is what you see. After that indecision, they now concluded they have to buy. You now see they buy. So that level where there is calmness, where there is indecision, whether to buy or to hold on or to sell, what factor is affecting this, before they now see that the factor that is affecting the asset will make the price to be better tomorrow, they will now buy so that they will make money tomorrow. That level of indecision of preparedness is the demand zone. This is what they factor in, that they call it rally-based rally. Do you understand? So now you look at it this way. I could not. So it didn't do me well at all. This is expected to what? Let's say my demand. If I go to my 15 minutes, we use 4 hours to get the zone. Abi? Is it not 4 hours we used to get the zone?
4 hours.
It is.
It's 4 hours. So we are expected to use 15 minutes now. So look at something. Break of structure, monowave or 3-wave structure.
Monowave.
I was expecting this, sir. To kill the market from here. I wanted to kill the market from here, 1 to 15. I was already celebrating. Anything my wife was telling me to do for her, this particular moment, I was doing it. I was even asking, honey, how far your gas still with me? I was asking, should I put the gas this inside motor? I put that inside car. I was happy because I knew that this thing money is coming. That this thing is going to give me weak level, average level here. I will clear it. Once I clear it, I get efficiency. Boom, to the upside. Excuse me, sir. He didn't come back. I came again here. I lamented. I didn't say boom like this. A word like this, I didn't say it in the book. Somebody even made mistake. It's not even correct. I forgot. I slept off. I carry my book because my exam is close. I carry my book. I didn't understand what was there because I was expecting this setup crazily to make money. Look at this again. I break structure. What setup am I? Is this a mono wave or a 3-wave structure?
Mono wave.
Do we have the setup down?
No.
I miss it again. Look at this again. The third one. Mono wave or 3-wave structure? Mono wave.
Mono wave.
This time around, I got it.
Okay.
I got it. So, right here, I need to check. Is it up to 75 to 80 or to 90? Yes. That is very good. So, in fact, because I didn't get it here, I will tell you what I did so that somebody can learn something from there. And that's where I'm going to close. I've given you enough, okay? I've given you enough. So now, look at it. So here, you now go to 1 minute time frame. 1 minute time frame to get what? To study for efficiency. Will this thing carry me there? Will it not be too much? Let's check. Let's check. No, it can't take me there. It's plenty. So now this is your entry. Let me just show you my entry on 1 minute. Look at it here. Came there by weak demand. And then where is my TP? Extend it on analysis time frame. Abi?
Yes, sir.
This is supposed to be my TP. But you know what I did? Close to 1 to 4. You know what I did? You know what I did?
No.
And I said, okay, this is, I now tested for divergence there. You see? Here and here. What do you see here? Higher low. Check the corresponding level on the RSI. Shaggy. Here, higher, lower here. What do you see here? What do you see here? So which means that what? Which means there is a hidden divergence. Anytime the trend is strong and you are getting hidden divergence, maintain, go and target 0.65. I'm giving you a formula now. Target what? 0.65. 0.62 rather. That was why I now push my TP up. TP hit. Bam! Do you understand?
Very well, sir.
That's how to do it. Trading is no more than three stage scenario. So now, most of you that often see chart complicated is that When chart is playing that it doesn't concern you, you are still looking at it. I've developed all this methodology for a trending market, for you to trade a trending market. And let me tell you, I made that argument with somebody that even when a market is doing consolidation, it's still doing trending inside. Somebody does not understand what I'm saying. Even when the market is consolidating here, inside this range, from here to here, will it not trend to come there?
It's trend.
Between here and here, will it not trend to come down? Between here and here, will it not trend to go up? It's inside a general consolidation framework. But inside a general consolidation framework, there is still trending. And I'm telling you today that we are master when it comes to trend analysis. With all authority, we are saying it. When it comes to analyzing trend, we are master of the game. So inside consolidation, we will still analyze the trend and come up with an acceptable, result. So for some of you who have subscribed to NTFX Trading Academy Trend Mastery course, you are going to see a lot of updates, like 6 different videos, very powerful. Even myself, I'm learning from the video again. What do I say? Even myself, occasionally I will go to the video, I'll go and learn from. After I watch it and it's ended like this, I'm happy. I feel happy. I feel proud of the work. And honestly, the day I did those videos, I just woke up fresh and I just started and I finished it. I started as early as 7 o'clock and I finished by 2 p.m. before I started live session with one of our students. Okay? But when you have done enough research about the work, anytime, any day you are called upon to defend what you have done, it's quite easy. It's quite easy.
Yes.
So everything I've told you from beginning to the end, I will tell you. And if you say something that I never said before, I will tell you I didn't say it like this. I didn't say it like this. Okay?
Yes, sir.
And a lot of updates are still coming, but I don't think those will, as I have told you before, those things may not be for you. You might not need it. You don't need it. You don't need it. All right? You don't need it. Okay? So, that's where we're going to call it a day.